So market update, November 2023. This is a look at everything that closed in October and before. And we are in a interesting market. Danny was kind enough to pull numbers again. Danny, let's see what you got to look at here.
Yep. Okay, great. Thanks, Rob. So first thing is overall inventory. And last month we said that dropped pretty significantly month over month from August, where it was almost 2,400, to September when it was just over 2,000 homes that were sold in the month. Things leveled off in October. We're almost exactly the same as September with 2,010 houses that sold. And so that's flat, and it's down only 8% to the prior year. So if you scroll back across to the left of this graph, you see that we're at 2,181 this time last year. So what's interesting about that is we've been doing these monthly updates. We've been saying we're down 20% over last year. We're down 25% over last year. Big double digits. Things seem like they're maybe kind of leveling off here to a natural resting rate. The one other thing just to note is we currently have 2,700 plus houses that are available and active on the market. So that's 1 1/3 months of supply. And if you recall, that's been one of the big constraints for us in the market is there's just not been enough supply. A lot of times we're coming in, we're talking about there's only 3 weeks of supply on the market. Here we are now, 1 1/3 months of supply. So things are definitely changing and slowing here.
Yeah, for sure. And what everybody I think is interested in the most is the next graph, list price versus sales price. And this also reflects our average sales price. Still year over year, we're still up. We are flat again, like you said. Danny, want to give us details there?
Yeah, this is another one that was pretty much flat to the prior month. If you look at the actual average selling price, you see the list price is still above where things are actually selling, which is another indicator of things just slowing down for the year. It means there's probably less competition for a given house, and therefore people aren't going above asking. So that's why you see that blue line sitting above the orange line of the actual sales price. But the other notable thing here is they're not that far off. Things were flat, maybe up a little bit over last month. But if you look at October this year at 372,000 and change compared to this time last year at 351,000, basically, you're up $20,000 or more year over year just in terms of the overall value of homes that are selling right now. So even though things are slowing down for the year, they're still up year over year.
Yeah, and this is a good example of the seasonality that we see all the time. Until Danny started pulling these charts, I knew that there was a seasonal stop to the real estate market, but I didn't realize just how much it hit. We're in a down market, guys. This is slower than we've typically been. Low supply leads to low numbers of sales. We're still up on the average price, though, and that's good news. So there's a lot of chatter out there about how the market's doing. We're doing better than we were this time last year. Keep that in mind. Now, that being said, if you're in a situation to sell right now, 5% above or below asking is our next metric. Seems like the below asking number is starting to tick up a little bit.
Yeah, so again, I mean, this is just more of what we saw from the previous chart, and we'll see it on the next couple here. The number of houses that are going longer, they're sitting longer. That means there's more likely to be a price reduction. It means it's an indication of less competition. And that's really what you're seeing. Basically, the orange and the green have traded places over just a few months ago, where homes going 5% above asking was much more common than those going 5% below asking. But you can see all in all, I mean, that blue is things within 5% either way. I mean, a lot of stuff is still going really close to asking, which that's been pretty consistent, I would say, most of the year. So it's just kind of those extremes that have been shifting. Days on market is another one, though, to your point, Rob, just an indication of things cooling off as we get into winter. You can see that both average days and median days on market have kind of ticked upward a little bit. And again, if you compare it to last year, we're the same, right? 19 days last year compared to 20 this year. The median is exactly the same at 7.
Median at 7 days. I think that's a better indicator. We don't have the very long houses that are sticking around in the market to throw things off. Expect, if you have your house priced correctly and it's in good shape, priced for its condition, we'll say, expect around 7 or less days. That sounds reasonable to me, still in this market. Now, there are some price reductions happening because it's harder to gauge the exact correct point to start pricing. We think we have that pretty dialed in, but a lot of people don't. So we're going to see this tick up, especially as seasonality increases. I expect this next couple months, that number to go up a little bit on par with years past.
Yeah, and that takes us really well right into the price reduction chart. You can see here the seasonality. We go up, we go down with this as we get into the hot summer months. Not a lot of houses that really required a price reduction to sell. And as things, again, are slowing down, we're seeing more that are going. It was a quarter of homes that were sold with a price reduction. And again, if you look at this time last year, it's almost exactly the same. It was 26% last year. So if I were a betting person, I'd assume that we'd follow the same kind of curve over the winter as things really close up for the year. But yeah, that's consistent with what we saw on other charts.
Now, here's a news little bit that's been interesting. One of the biggest factors that we've seen in this past year or two here is the interest rate climb. Looks like we hit our peak at the end of last month. The average showing was 7.76. That's actually what we were realistically seeing was close to 8%. That's actually coming down now. So stay tuned with that. I mean, we just have to see where that goes. There's nothing we can really do to affect that. But as that cools down, as the interest rate level drops, our market heats up. So just be aware, if you've been waiting for 6% interest rates again, you are not the only one. So get ready to fight the rest of the way with all the other buyers. Over asking, no concessions, no repairs. It's going to be a bigger struggle as people want to get into the lower rates again. And we kind of foresee that coming. Obviously, no crystal ball. But the way the Fed's been moving, the way the markets have been moving, everyone expects this to start coming down into next year.
We're already down. I just pulled it before the call. 7.44 was the latest readout from the Freddie Mac report that we used for this. So, yeah, definitely nice to see that turn a corner. I think everybody's hoping it kind of continues to stay in that low range or go even lower.
One piece of advice I'd give if you were thinking about buying this next year, if you're in a place in your life where it's time to make a move, don't wait. Seasonality is on your side if you're a buyer, and the rates being high is actually on your side if you're a buyer. I know that sounds counterintuitive, but you can refi it later and not have to come up with all the other concessions that are going to be required of you in the summer if the rates do come down. So just food for thought. Obviously, we'll keep you updated. Danny, thank you again for pulling numbers, and we will see you next month.
All right.